Let's try it anyways. Hopefully it works. Mm-hmm. Yeah. I need to check that one out today. I heard. Hello. Hello, hello, hello. I heard that ChargePoint might be doing a stocks or is doing a stock split, announced one, but I'm not sure when that's scheduled. Hey, yeah, doing all right. Sorry for the long delay. Hey, they just knocked over one of those controllers. They do not belong on the edge or in a place where they can grab them. So any kind of things dangling don't need to be dangling. Hey, yeah, sorry for the long delay in the stream. I was really busy on Friday setting up for a belt test in Taekwondo, and I had some responsibilities there. So yeah, I do help out around the called a dojang in Korean terminology, but call it whatever you want to call it. The school needs to be cleaned every now and then, and I help clean it. And I also do some maintenance stuff here and there, fixing some stuff. And so we had a belt test coming up, and it was hosted by our school on Saturday. So on Friday, I said I'd come out and help set up and clean up, and I did. And it went well, I think. I mean, I got my brown, so I'm like pretty happy. It's a weird thing. I always feel like both a sense of relief and accomplishment, and also a sense of like, I don't know. It's just me being like a try hard, I guess. Like I always want to do my best. So if there's something like I didn't do my best with, I end up thinking too much about it, maybe. And that's not always a good thing. So there were definitely ups and downs. I mean, I got through the whole test without stopping, which is a really big deal for me because most of my tests have been a big struggle, like physically. And just getting through it is a task in and of itself. So I felt like really good about that. And then I don't know, man. I had to do my forms. I had to do those. They call them kata in some traditions. That's more Japanese, that word. But I had to do my forms. We just call them forms. They could be called anything. Pages, whatever. I had to do those, and I did them. I think I did 900 of them to practice for the test total, which is sounds like a lot, but it was 300 of each of my top forms. So for the last like 4 months, really more like 2.5 months. I'm sorry, I don't know why I said 4. I've been doing those, and it's exhausting, but you obviously get really proficient at it. So I was happy at least that when I got to the forms, like I felt like they were really good and sharp, and I felt really good about those. I didn't feel like I did a bad job. The kicks were always the hard part. There was a lot of jumping and stuff, and I'm not like an old man, but I'm also not like a spring chicken. So certainly a lot easier if you're like younger and they added an extra they added an extra jump kick, which did not make me happy because I was like, really? These are like the most brutal kicks, and I don't like having. You already have to do like 6 each, and they added another one, and I was like, why? This isn't even on. This is supposed to be on our test. But when a master calls out a kick, you just do it. So I was like, all right, I guess we're doing this. But man, I was like dying. That's normal though. I don't know. Yeah, you say whatever you want about martial arts as whether or not it's effective or you can judge this or that, but I don't think anyone could come watch one of our tests and say that you could do that without extensive hard work and training. So everybody there, whether they're young people or old people, like they've all had to work really hard. So it's always a really fortunate. I always feel really fortunate to see the tests and participate in them. And it's a lot of work. So it's a lot of work. But yeah, so now I'm brown. I got a black gi. So they award a black gi when you get to brown belt, and then you get about 10 to 12 months usually. Just depends on when you're able to test, because they don't do the advanced testing like every month. So they kind of rotate them out. So you have I would say at least 9 if you're going like really fast, but most people will take the full 12. So it's a year between brown and black. So it'll be a while. So pretty much beginning of next summer or something like that, I'll be able to test for black. So should be cool. I don't know. There's not much else to say about it. Set out to do something. I did it. So I'm happy about that. And we'll see what happens now. I got another journey, I guess. All right, yeah. So I was just checking in on this. I wanted to see. It is a 1-20 split. It's kind of a bummer. I don't really know what to say. There's nothing really to say about this. When ChargePoint lost $1, this is always the danger, right? Is if the market can't find recovery quickly, it's going to probably have some kind of a catalyst event like this, because they have to comply with stock exchange. And there's a lot of little rules, like they can get extensions. I don't know if you guys have looked into a stock like that. Most of you probably have seen that happen. But usually at some point they have to announce it. So this is a 1-20, so it's going to be not pleasant. My thoughts. I think that's a bit high. The weird thing about this kind of stuff is like, it doesn't change any of the value, but it certainly encourages shorts to short. And that's been my experience. I haven't really seen a lot of these splits, unless it's like a temporary burst. I haven't really seen a lot of these splits result in upside. I mean, correct me if I'm wrong, but most of the time, once it gets to this point, if it's splitting, it's not pleasant. The irony here may be that the stock itself actually looks quite nice. Now it's missing the breakout. I'm trying to doodle it right now, and I don't think it's there. You could have perhaps this set up, but even that it got rejected on. So I don't think it's there. But I will say this: as a bottom, it had a lot of potential. I say had. I don't know for sure what's going to happen, but this doesn't look bad to me. It made a reaction. It jumped a local creek, and then it goes higher. That to me looks fine. So, the bigger issue, of course, being if this is an auto reaction, this is a sign of weakness, then you could have potentially significant downside. And by doing this split, you're giving yourself a lot of room for that. So even though right now, looking at something like this, you would think it's ludicrous, you'd think it's ridiculous. Like ChargePoint couldn't drop down to 23 cents, right? I mean, even like some reputable, we're not talking about like Joe Schmo in his basement calling stuff out. Like there's some pretty reputable firms that were saying it still has like a $2 to $3 target. Like that's where its valuation is. So it seems a bit ridiculous to think it would go down to like 25 cents. But if you do that split, and now it's, I guess it'd be like 60% of 20. So, $12 or something afterwards, something like that, whatever it ends up being. I mean, like that's a pretty bad. Now you have a lot more room, I guess what I'm trying to say. I'm not a particularly big fan of that. So as it stood, I wouldn't have been as negative about it. I had actually kind of looked at this and thought that we might get a rebound if this came and kind of dipped low and finished a back test. Again, it's a hard one because you watch these things for a long, long time and you really hope for the best. And this is just a loser. I mean, frankly, I wish it wasn't, but it just is. As a company, are they going to go bankrupt? I don't think so, but there's a lot of competition in the field. And like Blink is another one. It's the same kind of deal. Everybody got hit pretty hard when they started dumping the EV credits, and now there's the further continuation of EV tax credits going away. That's more for like the car side, less for like in general. But before that had happened, the infrastructure grants, if you want to call them that, whatever it is, all of that was taken away. In theory, in a competitive market, do you need those things in order to succeed? Do you need government bailouts or handouts to succeed? No. I mean, if there's demand for something in the market, then there's demand, right? There's profit to be made. And there should be a reason that infrastructure would be successful. Their technology's fine. They keep innovating. They have news like every few months about some new feature or something. But again, it's just kind of the way of the world right now. We're going backwards in some ways. Even though like everybody was starting to step forward, even these old school car manufacturers were starting to put out the EV on the assembly line, and yet here we are, right? So, and everybody's got their opinions about it. You can say whatever you want, I suppose, but the myself included, right? It's just an opinion. The overall picture here is kind of bleak, I think. I don't really have strong guidance for it right now. At this point, it's probably just personal preference. Like, if you think this company is okay and it's going to last, I think it's a fundamental question. If you have shares, if you think it's going to last and outlive kind of all this storms, then I don't see it as a sell. But that's true of any company, right? And if you think that it's just kind of on the weaker end of it, then it's probably not a good one to hold when a stock split's coming up. So, that's just the truth of it. I would love to see like some really obvious counter evidence to that. If a stock is really bullish and is long-term bullish and they do a split, not a reverse split, but a split, that can kind of continue momentum. But typically if it's bearish and it's been going down forever and it doesn't have a good setup or whatever, and you see that reverse split, that's not typically very good. Again, show me some examples that a reverse split really was beneficial. I can't even think of one off the top of my head. And every time there's some kind of a split, someone will say, well, there's a split. And I'm like, you might get a temporary bounce, you never know. There could be a temporary like short covering moment or something and then load up and go back down. So as a chart, I would like to see something of that kind perhaps, but I don't know. This is a tough one. Like I said, if the auto reaction already happened here, which this isn't much of a big sell down to me, meaning like a volume spike, but I guess, at the end there was heavy selling, but there's not really like a reaction there. The volume doesn't really pick up very much. So it's a tough one. It just looks like it's kind of in the middle. Like it didn't really find a true bottom perhaps. Anyways, so this is really important. That's why I brought it up. We don't look at charge point that often, but it's coming up. It's about a week away, a little over a week. So it's kind of rough. We'll see. You never know. Like I said, if I were more bullish on this, I might think that this again could just be like a really strong, hey, find a higher low and then you're ready to go kind of thing, and break out. But in the case of what we're kind of seeing here, it feels like a stretch. It feels like I'm just kind of reaching for like hope or something. But that doesn't typically happen on that split. So I would be watching really carefully to see if there is a short covering moment if you're trying to get out of the play. And then, frankly, I think you just got to kind of go with the flow of the directional movement. This is probably going to be the one that's checked right here. I was trying to find it. There it is. So there's a number of things that could happen in this area. It's really hard to say. But I would suggest it's probably below. And again, I think that's just the nature of this, having weakness kind of built into this second low. Like, it just seems more likely. So when is GME going to go up? I mean, it's already up. I mean, what do you mean it started to move up last week? When is it like officially going to go? I'm of the opinion that most of this market movement right now is centered not so much around the tariff stuff, more so around rate cuts. And the main reason for that is that I think that what the market, to me anyways, seems to have decided is that tariffs don't really matter anymore. Like, or if they do matter, we're not really showing that just yet. They haven't really shown like a lot of teeth. Because we're basically, when we've fully recovered from earlier in the year. Nobody would look at that unless they're just completely and totally like out of their mind. Nobody would look at that and say tariffs didn't play a role in that. But now the question has moved from, okay, we've got these tariffs that are shaking up the trade in the world. Now it's more about like, how do the pieces fall? And at the end, do they cause inflation to rise, by the end of the summer? So contrary to what, the president-elect says, or the president says, excuse me, I don't know why I said president-elect, that was wrong. But contrary to what the president may say about them waiting, like as if they've just decided this, that actually was in the cards for a while. I remember a long time ago them talking about summer and how it probably would be 3 to 4 months, and that was again like 3 or 4 months ago. So I'm looking at this like it's fairly consistent. The reason I remember that is because when we talked about AMC and we talked about AMC and GME, we specifically kept finding that it was unlikely that it was going to run in June. What seemed more likely was that like a real June run, right, that just breaks out and goes. What seemed more likely was you were going to have a potential like final low or something like that if you're going to have a spring in August. And that came up pretty early in the year. I remember in December reevaluating, knowing that this was dropping, and it was like, well, that's done. It's going to go down now. And that was the big move, and it wasn't that big, And really, ever since then, we've been really analyzing like that long dated, and it definitely looked like it was going to be after summer. The only thing I can see event-wise that happens after summer. Obviously, you've got the box office for the summer. Wed Bush came out, I think it was last week or whatever. People were like, why is it running? Well, the only thing I found was that they use as an excuse, and I'm going to call it that, because I think from a technical standpoint, this is where I thought it might be, and it may end up going a little farther. It may end up going quite a bit farther. But from a technical standpoint, like I already kind of expected it to come back to 330. I even had put on the chart, like watch for gaps around 304, and it gapped around 304. So from a technical analyst standpoint, I didn't really need a reason, but if you were looking for one, they had upped the target to a whopping like, I don't remember, like $4 or something instead of $3, right? Like that was the extent of the news that I found. Now, looking at box office stuff for the entirety of the summer, has it been good? Has it been pretty healthy? Yeah, I think so. I regularly have that stuff streamed to my that feed streamed to my phone. So I'm always every single day I'm always seeing like headlines about openings. Some people think that I don't follow the box office. They come on here and say it doesn't matter until the box office recovers or something. I think the box office for AMC is extremely important. It's a movie company. Like it's a movie theater company. It would make no sense to not pay attention to the box office, right? Because from a fundamental standpoint, if the box office does better and their business model is better, then you will have increased profits. It's pretty straightforward. Generating more cash flow. It's a service, right? But they're not the ones that are providing in some ways, they're providing a service, but they're not providing like the product entirely, which is kind of strange, right? And we've seen this in other industries. It's not complicated, right? So somebody that, I don't know, like a seafood company, and they sell 10 different kinds of seafood or whatever to grocery stores. Well, if they have a sudden outbreak in some kind of, or a loss in some kind, it was like the whole egg thing, right? It's like your chickens are now belly up. Well, your eggs are not there anymore. That's a problem. Okay, the movie industry has been strained to the bones over the last decade for a lot of reasons. Do I think it's ever going to completely and totally recover to the exact same place? I think it needs to look different. But I've said it this entire time, ever since I started looking at AMC during COVID, my argument for getting into AMC was actually a fundamental one, believe it or not. You guys are like, well, the fundamentals for AMC are crap. Yeah, but my argument was not about, because I'm like, yeah, they're not the best, in terms of a cash flow kind of stuff. But my argument was always like the movie industry. Like, I feel like there's plenty of space. It could be a win-win with the right people, right? Who are doing the right steps. I don't see that. I never have ever looked at this company and said, I don't think the film industry is going to recover. That's never been my argument personally. So if you're wondering, like, do I watch the box office? Do I think it's important? Well, yeah. But ultimately, like, sell the news kind of, right? And those are important ideas, because when you hear that term "sell the news," there's a kind of an opposite to that, right? If you were going to sell on really good news, then you would be buying on what? Maybe not the best news. The idea of an accumulation happening when the box office is recovering makes more sense to me than it rocketing to all-time highs like it did before while the box office is struggling necessarily, so it's like kind of a flip-flop. And I've maintained that for a while. So I don't feel that there's any kind of mystery here. Like, if this is going to recover, by the time it's like finally recovered, AMC will have already shaken out pretty much everybody that it wants to shake out, including in a lot of cases bulls. Like, it will be in a more regular growth spot, I think about it like a giant, maybe like a whip or a rubber band, and how you're trying to really shake both sides out until things kind of settle down and you find that middle ground. And so we've had a lot of back and forth discussion about this. I really don't want to address every single movie that comes out ever, but if you do wonder like, hey, does Booksy even like know what's going on in the box office? I do. I pay attention. So Superman did very well. The Jurassic Park movies done well. Before that, there was The Sinners. That was a really big one. That did really, really well at the box office compared to its budget. The Pixar movie flopped hard, like really bad. But right before that, How to Train Your Dragon did really, really well. It's just kind of a mixed bag. And it just sort of depends on the way you look at it. Minecraft movie did really, really well. I mean, you can say whatever you want about streaming versus the other. It made almost $1 billion. It's like the Mario movie, So they're clearly finding a new audience for these films. So I mean, there's no reason to to look at $1 billion in box office revenue and just stick your nose up at it and say, well, that was just a one-off thing. Well, it's not a one-off thing. It's happened multiple times. The Mission Impossible movie also did pretty darn well from what I've seen, and it's still going in some places. They did an extended IMAX run because Tom Cruise told them to do it. Why not? I mean, there was an article about it. He told them to basically, he was like, no, keep it there. And they were like, okay, Tom Cruise, we'll keep it there. And then it made pretty good money in IMAX. I mean, for an IMAX release, you have to understand that's like they keep the track of those numbers separate. But these are things that are important, but some people I don't know, they look at that and they think that that's all that matters. I don't think that's all that matters. I don't think analyst target are all that matters, things like that. Why would we be at all surprised that someone would say $4? It's literally like the middle of this range. Like the idea that the target is $4. Well, yeah, no duh. We knew the target was $4 when it dropped from $4 back in January. How? Because institutions trade it and they marked it off. Like they already knew that was going to be where the floor was. So it's like, oh, but maybe later it bounces off that floor and goes higher. Yeah, you think? Sassy Booksy coming out. Oh, so now if it whips around, it's going to whip around 4 because that's the new target. Really? You don't say. Tell me more. Tell me more about this $4. This is the new norm. Tell me more about that, I'm so ignorant. I don't know anything about it. It's just like, so yeah, of course I like that they up the target. That's a positive, but I don't know, man. People last week were losing their heads a little bit about that big move, and I was like, hey, it's a big move. Don't get me wrong, 10% is nothing to stick your nose up at. It's a big move. And then it ran another couple percent after that. I think after we got off, it was like 11% up or something on Friday. Is it going to keep going? Well, maybe. It found support above the creek here, like above essentially like what I would call like that cat ear mark. Did it make a higher high? No, not yet. Well, what do you mean? Yeah, it did, right? No, it didn't. Like the drop off for the cat ear is up here around 350, 346. And if I'm not mistaken, this like 347, 346 area is what it hit in extended hours. Well, when does it get to a point where it's actually running here if you don't think 10% is running? I think this was the reaction that needed to happen. From a technical standpoint, I had measured out like this drop down move. I thought it was going to bounce and make the same move. At first, I thought it might do that here, and again, we were talking about 350. Well, you drop that down. Now it's exactly where it should be. You look at the intersections on that. It's like it's an iterative motion. So it looks a lot like essentially like December or even like this guy, perhaps as an example. It should have been higher than 310 for sure. And 315 was an area that previously was like, I don't really see why we get stuck there, but it did. And then it dropped on some news of a possible offering or something, or a type of offering. It was kind of a strange drop because it really hasn't happened. It was on shareholder approval. And then you have this rebound from pretty high volume. We talked about the on balance needing to come back up. Guess what? It's back up above that level at 43 million. That's the place that it's more often than not distributed. So when you look at the big picture, does this look like a cat ear formation to me? Yeah, it does. And I don't want to be the smug guy in the room who says, oh, I told you so or something. That's not what I'm trying to do. But it is important to know, like when you get something right, and your concept is correct, even if your timing isn't like a perfect, I think it's really important to just pay attention to that because conceptually, like this was the correct idea. We had talked, and we have talked quite a bit about this formation, which I call a cat ear. It's a joking term of sorts. It's a complicated one because it is a often associated with distribution, right? And it's not a pleasant thing to think about. We've talked about this, and one of the things I've said before, and I will repeatedly say it, is that this is an iterative, meaning that it nests inside itself. Nesting is a weird idea, but it's like this idea that like the small parts, a fractal, literal definition of it, right, is the small parts are the same as the big parts. So it's like a particular, let's say a triangle, and then when the triangle all clumps together, it just looks like the exact same triangle but bigger. Right? So it's made up of the same pieces. And one of the things I've talked about fairly consistently on here, maybe to an annoying point of view, even at times to a lot of people, is this concept of like the false wedge that is actually like not a wedge. And there's this concept that this is a cat ear and it really is iterating in itself the same thing over and over. And as a result, this comes from way back. Like first time we really started looking at this, for me anyways, was in November of like 2021 when I first started the channel. I mean, it was so long time ago, but it was a really important concept, and that is that this just keeps creating the same pattern until it's exhausted the range, and it's a liquidity question. And then you decide where you're going to go. And typically there's some markers, some key markers that are built around this. Sometimes it's really, really weak. You know, it's not always like super strong. Sometimes it's really, really weak, and sometimes it's stronger, and it doesn't really make a huge, huge difference because you'll have the markers, right, with the flow of it. What matters more is understanding that this, as it goes, it's going to look like it's doing the same thing, but on a smaller scale. And ultimately, until it kind of gets to this place where you can't count it anymore, it becomes almost imperceivable. You really can't say that it's over. And there's some complications to that because we're human. We're not computers. We can't easily measure everything under the sun, but it is possible to track to some degree. And so one of the things I would expect is that as you get these waveforms that you would see the same patterns appear. And what else I expect is that I know that on the big picture, this most typically, this second form, this chopped up cat ear, right? It most typically looks like, especially like depending on how you want to do this, because I could do it like paw, ear one, ear two, which is usually what I do. So if that's the paw, this would be ear one, ear two. This most typically looks like a four top, like four different things. And there's other people, that Extreme Gains guy, he decided he wanted to call it a box top. And then he sent his minions over to tell me I was stealing from him. But that that's not possible because I did it before he did it. That's just one example of the ridiculousness of this whole saga. But like that concept that he has is correct. We agree on that because he's saying that that's a really significant turning point for the stock. And I think it's also a really significant turning point. And oftentimes it turns into what looks like kind of a boxy, flat top, right? I call it a chopped cat ear. The reason it looks like that is because you're seeing the micro iterations really play out. And you get these really elaborate motions, like there'll be like a big spike here, right? And the reason I use 4 is because it's more typical anyways that you do see 4. And I said his minions because he never personally ever did anything. I don't know the guy. He never did anything. So don't go attacking him. He didn't do anything. But his minions came after me and were like really zealous about saying I copied him or something, which is, again, complete baloney. But whatever. It's the internet. People believe whatever they want to believe. So who got there first? I don't know. Looks he has a video from November 2021, but whatever. I got rid of it. Eventually I was like, forget it. Who cares? So then you can't prove it. You can't prove it. I don't need to. I'm just messing with you guys. This typically you see 4. So there's like 4 major volume spikes. And so if you could identify, for example, like one of these parts, you probably could see it multiple times. Why am I bringing up this silly thing and talking about random things that don't matter right now? Well, it does matter, because the way I see it is that on the big picture, even though this may not always look completely obvious to us, sometimes that's why it's helpful to have kind of a second indicator. For example, I can see this as that wave. So I can see this certainly as possibly like 3, like 1, 2, 3. But certainly I could see it as a wave up, wave up, wave up kind of motion. So this is one iteration. And again, maybe 2 iterations, 3 iterations down into the small corner. But ultimately that's a pocket between. So you would expect there to be like a little bit more, potentially. So if we're looking at these as like ramp up periods, that would be like probably 1. This would probably be 2. This is more than likely 3 right here. And it gets to a place where, yeah, maybe it's a little hard to perceive it, but that would be logical to me. If somebody said that and they said, well, I think this is the start of the second ear, and maybe this is 1, but I think this is more likely it, and then you might have another. Well, what happens if it just keeps breaking upward? Like, does it just keep going indefinitely and just break out and go? Man, there's a lot of questions that we'd have to like go through on that. And I've been through it pretty extensively. I have one major concern right now. I'll tell you. I'm only going to really talk about what's new here now, because the rest of we've talked about it like every other day on here. Maybe too much, right? I'll tell you what's new. What's new is that some sources say that it's July 31st. That to me is new for earnings. And the reason that would be a little concerning is that's about a week before I had originally measured it. What would that imply? Well, it's entirely possible that this is a change of character if it holds up here. And that's a big deal. Now, has it broken above the top? No, it hasn't. Let me just kind of clear it all, and then I'll just talk about just this one part, because I want to sort of focus on that for just a second. The reason this matters is because that's a week ahead of schedule, so to speak. And I find that to be kind of curious. The other thing is the September 16th, it's like 15th, 16th, something like that, is when the actual Fed meeting is. And then there's another one at the end of July. But the one that's at the end of July, they're not expected to rate cut. So like right now, I would have to see this more likely as, and this is the way I had envisioned it before, again, looking at this as iterative motion, I would have seen this as a, where did it go? It's gone. Oh, it just broke. I would see this more likely as again, an iterative motion. My expectation, if I were just looking at this from the point of view of, let's just say, cat ear kind of stuff, would be that this would break down, because you'd have like a 1, 2, 3, 4, and that each one ramps up for sure. They should. They usually accelerate. That's an appropriate analysis. So they usually go faster and faster every time until the very end, but then the last one would crap out. But again, the timing on that shift is quite dramatic in some ways, because when I'm measuring stuff out, I know you guys are like, well, it's only like a week difference. Who cares? It matters to me if it is then, because it does make a difference in a lot of ways. So my expectation would be that this is where you hit like a pinnacle. Now, that is where we say, what do you mean by change of character then? Well, I wasn't at all surprised to see a gap around 304. The reason for that, if you're wondering where that even came from, if you're like, well, where did 304 come from? Because that's not 3. Why not just say 3? I won't say just 3, because the measurement to this top, unless it goes higher, the measurement to this top right here, which is around like that 412 area, that measurement, or like 405 or whatever it was, 408, I don't know. It went a little higher. That measurement will be the backup point later. And therefore, any measurement at this point forward should be measured off this hinge right over here around 405 to 412. So measurements may not need to be that specific all the time. But what I found was that the 304 leads to 226. Now, I'm going to go out on a limb here because I've said so many different bottom targets. I think some people just really don't agree, and that's fine. Look, if you think it's going to hit 180, stick with it because you might be right. And I'll tell you right now, I'm not really positive that it's going to be this number. If you think it's just going to go to 238 or 237, stick with it. You know, like we're not doing DraftKings here. You don't have to bet on a horse. There's no reason to make it into this huge competition. Just stick with what you think is right and have a little conviction, because anything, in my opinion, from like anywhere down there under 250 is pretty good deal. Especially if you're just doing shares only and you're doing or longer options, you're going to be fine. You know, it's not significantly different. That's the 50 cents range. Maybe that feels like a lot, but I've been saying like 226 for a while because of the interesting dynamic that we have with the past. And there's a lot of very, very fascinating things that can come out of that conversation. My point being is that I did a measure recently, and the 304 seems like the best fit for the actual middle. And it does come from previous times. It comes from back here on the 26th of March. Again, it's not like I completely invented some number and just picked it out of the blue. There was a reason I went to that one first and checked it out. Well, I went to it like second or third, but I checked it out. There was a few right here that I wanted to look at. That one seemed the most likely to me. So I said, well, I'm going to look for gaps. I'm going to see if they keep making gaps off 304. And sure enough, it's pretty much right where it was expected to be. Now, the gap itself, you guys are like, well, it didn't go off 304. It went down to 301, closed at 302. Yeah, but it opened at, this like 306, 304 level right here, not 306. When I opened at 304, so the candle body itself goes from like 302 to 304. That's close enough to me. I'm like, well, there you go. That was where I was looking for it, and that's where it happened. How did I know it was going to gap up there? I'm not going to get into that. I can't even right now. It's like trying to read your own past mind. I had a lot of weird. I did some analysis that I think was legitimate, but going backwards, looking at it, I'm like, yeah, I don't know how I did that, but I just felt like that was going to be where it was. I'll just leave it at that. It's not intuition. It was really based on math, but I was like, there's probably going to be a gap there because the institution would mark it off as a liquidity spot. Like they have to mark it off at least one more time before any kind of a drop happens. So it would have to be a gap. Like I couldn't see it any other way as the most likely form of marking. So like a cat with territory or a dog with territory, right? So I'm looking at it thinking, all right, well, 304 is very highly probable as a middle. When you do a measurement from there, you get a 226 variable really neatly from, again, looking at like a helicopter point of view to where like these markers should be on these 50-50s moving up. So it's like a reductionist. So it's kind of like beginning with a possible end in mind and then saying which one fits the best. And it's all a bit conjecture, but it works really well. So I was like, well, that's probable, and it already was used. So it's like it's a pretty likely target that they're going to use for an anchor. And it's where I would go if I were trying to drop it and then whipsaw. All right, behavior pattern. What have they done in the past? We are getting now a consolidation here, potentially around 304. Now, with this possibility that earnings is sooner than later, it does beg the question, like, well, what happens there if that's the case? This is my concern when I talk about stuff like the cat ears, right? This is always going to be the concern. Okay? What constitutes a cross up and over? Because remember, there was more than one thing that happened here. This didn't just go up. That's great. We can talk about that all day. Be excited about how it went up here to 4. It didn't just do that. It went up at a certain rate, It also jumped over certain resistances, held some, didn't hold others. Like we can see on the 4-hour, it's actually wrapping itself pretty neatly around the 180. Now, creeks are very similar sometimes to an EMA. The difference is subtle. It is there. A creek is a live thing, and it really doesn't necessarily depend on time frame. Like there's definitely creeks on different time frames, don't get me wrong, but they're pretty, once they're created, they're there. They don't go away, they don't change like an EMA. But like unlike an EMA, like right here, there wasn't, I wouldn't have said there was a creek going through the middle at like 3 or at like 485. I wouldn't have said that. I wouldn't have used the word creek. I would have talked about the top resistance as a creek here and the bottom resistance as a creek. Now, some of you are going to say, well, yeah, but if you look at the 200, it's up there. Or if you look at this time frame or this time frame, yeah, I know. What I'm saying is that this is just a sort of a static reality to me, like that this is just where it is. And then that becomes like a weakness, so on and so forth, yada, yada, yada. Okay? EMAs are great because when they break out and they hold, they give you a sign of strength. Essentially, you're saying that like there's continuation, especially behind that, then it's going to be strong. And if there's not, like if you're just chopping around it, which might be the case right now, we'll see. That's not necessarily giving you the answer that you want if you think it's going to go up or down. It could be very indecisive. So you really want to see if it rejects or holds an EMA. I get that. But when I say creek, I'm just trying to help you guys understand, like, that's not really what I'm saying. I'm really talking about that moving down resistance, right? There's a lot of ways to maybe draw it. The best tool, honestly, would probably be the little marker tool, but I don't like it that much because, well, and I don't even know if they still have it. Who knows? May have gotten rid of it. Oh, it's still here. Because what this does, I think, and what it really helps to do is it shows you like really clearly like where the creek crosses are and then what the resulting action is of that creek cross. But it also helps you to understand like this is now like a new creek, right? And then just like an EMA, as reality sets in, well, yeah, that's true, Booksy. It did jump this creek back here and it looks like a football thing or something. But as reality sets in back here, this did jump back beneath the creek. Oh, yeah, but that was support. Yeah, it just so happens that that was triangulated quite nicely, wasn't it? Yeah, that's not me saying that it's different. That's me saying that, yep, that makes sense to me because a lot of times that's the way it's triangulated, which is why I pay attention when they don't go backwards to a support. If they don't go back to check a support and they keep going up, that's a dangerous place to be. You want to see those backups continuously to check those supports. Otherwise, you're on thin ice, right? And that's another term that I might use sometimes every now and then is the ice, which I usually call it like a rising. That's more of like an ice term, okay? That's a newer Wyckofian term, but it's this idea of this rising, right? Until suddenly it doesn't, and you're like, oh, you know, that's a sign of weakness. Somebody's poking a hole in the ice. They're trying to break through it. So here we do have evidence of an ice. We've got one, and it is rising, and it hasn't broken yet. There's no cause for alarm. It might look like it broke on here, but it didn't break. I haven't seen anything. I did a line here on the other chart. It's not broken. It's above it. Again, I'm a little concerned that it didn't touch it, but at least it went above it. It stayed above it for now. You might see this and see a head and shoulder possibility. I don't think you're wrong. I think it's totally a possibility here that there could be like a head and shoulder style action in the works. There's good reason to think that because if you look at the direction of this motion, you look at where those gaps are. Specifically, we have some gaps. And I'm going to get to the point here in just a minute. Specifically, we have some gaps that are very relevant to what we're talking about right now. And they are right here again at 304. That's one. You have also a gap right here, slightly higher at 330. Now, that's where we are now. But again, remember, triangulation is funny like that. And we also have a gap really close to this. Now we have another one right here. So this to me represents like a wave whip around. If I flip the chart upside down, it doesn't really matter. It kind of looks the same because it's a rotational symmetry of sorts, and it is. And when we were first dropping down, I thought we would get what's called a shallow S-curve. I thought we might see it bounce and drop and respond up with that cat ear and then do this. Well, that didn't happen, did it? No, it did not. But remember, even though that didn't happen, you didn't get that secondary run up that could have gone maybe a little higher. We were talking about like 420 versus like 460. That didn't happen. That formation is still there. And much the same way, I would use this as a similar motif for direction. Because had this gone upward and it done this is what I would have expected, that it would have come up and gone higher. In fact, if we look at the timing here roughly, and this had pushed higher, and I'm coming to like a point on this. This would have been reasonable, right? We would have said like, well, yeah, it made a higher high, then it made a higher low, and then it pushed up. But I would have used this as a kind of a whip around tool. And then I would have looked backwards at what I guess we would call like another cross, like this direction, for example, or this direction. And I would suggest to you that that's probably what's happening. It's triangulating like a different, larger turnaround. How can you do all that and be so sure that that's what's going to happen? Well, I'm never 1,000% sure, but it always tends to be pretty accurate because, again, these things tend to move in like 50-50 segments. That's what Gann postulated and why he used quarter system like 50-25-75. It's still applicable today. You can use Gann charts today. They're really right over here baked into every major tool set that you have. This is not like a new idea that they're divisible by 2. But this concept right here of like we broke a creek, right? This was a long-standing creek coming down now. We broke it. We found a support. Now we can create an impulse. That's your Elliott wave, people, right? Like a push-up, whether it's a 1, 2, 3 or 1, 2, 3, 4, 5. So it's just an ABC correction. Or if this is a 1, 2, 3, 4, 5, which is not likely at this point. Either way, like that would be very sensible. Now, this didn't happen. So the question then becomes like, well, that didn't happen. So what you're saying is that this middle of the cat ear, right? Because either way, if you're looking at this section, you would say like this was roughly the middle of the cat ear right here. I think it actually literally was on June 16th. If you want to know the exact date, I'm pretty sure that's where it was. So I remember measuring from here to here. I think it was the 16th. Hey, no TV. Oh, okay. That's fine. Are you also going to talk about GME? Yeah. We'll talk about GME in a minute. The 16th or 17th is like the middle, right? So I guess what I'm trying to say is that the center of these two marks didn't change. It like the timing didn't change, the position of the stock change, because we had weakness. Like there's less buyers, more sellers. It's sagging down instead. This is why sometimes, even though those fractal guys are like preaching about how awesome it is, sometimes they get the up and down right because they're using something like this. They're not looking at where those breakdowns are. We said if it didn't come over 315, it was in trouble, and that's what happened. Okay, if it doesn't do this, then it's going to be bad. So we use some of the same inevitabilities, but like that to me makes sense. So the rotation here, nothing else has really changed. It's just a matter of like, okay, the rotation is now lower. So this pivot, instead of pivoting high, and you might say, well, couldn't it still go all the way up there? You talk about this like slingshot. Couldn't it still go like way up here? You know, I would suggest to you that that's unlikely because unlike this other setup where you've got this cross to the upside, this S-curve should not go the same direction. It doesn't make sense. It could. It's not impossible, but it's like less and less likely as time goes on because you're not developing the same momentum. Yeah, but you're saying on the big picture this could happen. Yeah, it could, and I think it will. But I'm also, that's just my opinion, but I do believe it will. My point being is that take the chart as it is, measure with what's there, and you see that it's not exactly in a place of incredible strength or incredible weakness. It's kind of in the middle. At best, what we could say is that this broke down. If you look at where that halfway point is, right here, okay, this broke down, and then right here, this is where it breaks out. It makes sense because if you look at where it dropped into this and then where it broke out of this actually gives you that timing pretty neatly right there where it kind of like broke out off to the side. There certainly is like a sense that like this is pretty much over. Like there shouldn't be much time left, and now we just make a decision about what's going to happen. But just like I would have done the measurement up here with the 50-50, I could do the same measurement here with 50-50 and come to a different conclusion, which is like 365. Okay? So again, just to repeat, the other one I was just suggesting that you go higher, because if this had broken out, I would have been like, oh, we should be doing the sorry, TV got really loud. We should be doing the breakout here, right? Around the 50-50 mark or so on and so forth from the higher trajectory. And that gives you a sense of where you might be going next. This is the same deal. I think it's very similar. It's just lower. Does that give you enough room here? Does that give you clearance to make it over the top? Well, no. And at the same time, does it give us support that this is... I mean, what I mean by no is that not necessarily. We'll have to look in a second. I don't think it's quite there. If it is, it's like barely higher. Barely higher than the peak from over here, the reaction. But is it a triangulation? Oh, yeah. Definitely is. Okay. It doesn't give you a higher high on the total, but it definitely gives you a chance of coming back up to 360 where this sort of starts selling down, which would probably, again, be more likely shorts covering as opposed to buying. But sure, yeah, if you got over top of that, it could, I guess it could rally. It's totally possible. Right now, I'm just suggesting that's the measure. Is there evidence that that's correct with that being the 50% marker? Yes, because of the low that was made right here at 318. So now we're establishing that we have a different sort of directional movement here. And I'm actually going to fudge it a little bit now because I'm going to use this guy. Actually, it might be even lower than that because that might be more accurate. It's a pretty bad move. Let me make sure I get that right. Should have been the closing value. That's really low. That's like way down here. Yeah, that there's like 1, 2, and then 3 points of like possibilities. This is like the lowest. That was the one I had measured, which you saw on the other chart. It only goes to like here, basically, like right up to this ledge. And that makes sense. Really, all three of them are legitimate because you can use any one of them. And they're probably fib extensions or fib retracements, more than likely, from the top down. And then the second one, that one's still a little wonky. So you get where I'm going with this. This is just a method for understanding like directional movement. And in the end, you might say, well, I don't really know which one it is, and so I'm just going to like pick one. Well, you're not going to be completely wrong if you know that at least this one's hit, because you'd be right. If at least that one's hit, it's going to look pretty strong. If the next one's hit, it's 347. That was the extended out after hours hit. And then if the final one is this midpoint, then you're talking about the 360 mark. All three of those are logical because they represent, and this is the back test that you do when you're checking, all three of those could be 50-50 markers because all three represent pretty clear and obvious. I'm going to actually drop that one right here. pretty clear and obvious ledges from the walk down. That means that institutions were selling off these levels. Now, were these already in existence? Probably. But if they're selling off these levels coming down, oftentimes it's because A, they're going to create a Fibonacci extension from those levels. And if remember, selling off those levels for us should be thought of as also as like kind of like quote unquote buying. Like where does the buying happen? It's the selling. Where does the selling happening? You know, those are the levels that you would look at. So how do you get back to the lows? You break down through the creek. It's the only way to do it. So if they're going to attempt to make any kind of effort to get to lows again, they're going to try to push back through. They left a pretty big gap here at 305. Bears are going to try to push right back through that level. The consolidation is already happening in a way that's iterative. So you have a consistency with iteration. You have a consistency with everything except for what? Well, the only thing that we're really not sure about right now is when is the earnings actually happening. I think that I'm going to go with the early date now and just say that's probable. And then I'm going to keep that other one on the back burner. We don't know that information. And I know that people will say, well, I know it. If there's an official press release, let me know. I'll check it out. But I saw on my brokerage today that it said it was this time. And then TradingView, it says it's a week later. It does matter to me because the timing, I think, shifts things around quite a bit. I would suggest to you that in some ways, though, it probably doesn't matter that much because when you're looking at where do you end up, no matter what you do here, you can see that walk down. You can see that resistance and where that would be. It really makes very little difference. It's already hit the lowest. Sure, there's some other places it could go by then. But unless you're thinking it's going to moonshot, it's pretty unlikely, right? That it's going to make it past 360 something, 365, 366. That area is where this distribution sort of starts. It was a double top, it looks like, on 361. And going backwards, this is the level I would probably try to use, if not right where we are right now. Again, flip the chart upside down and just take a look at where that is. Now, you probably look at that and say, well, I mean, that could be like a weakness, but it also could be that we need to find support at 377. Why couldn't we go all the way to 377? And that's the bottom over here. It's possible, but I think that this is where most of the buying has happened. So again, looking at it conservatively, yeah, 377, not impossible. But 360s would definitely be the more logical approach, like the more straightforward approach. If it's going to be, how high could it go right this second? Why don't you think it's going to go any higher right now? I don't think it benefits us to not get a spring. I also don't really believe that this actually checked any kind of and this is what I'm getting at when I talk about the cat ears, and then I'll go back to GME. We talked about the upward motion here, but there was the downward motion. I was talking about these layups on these, what I guess we could call the main creeks, although there's really only one creek at the moment. You can do multiple ones. Why would you do that? Why do you ever do that, Booksy? Because when a creek is jumped, right, and like in this case, you know, we probably jumped this creek. The reason I'm using this one is because of that hit right here. Now, I did it a little more squiggly a few minutes ago. I took you guys and I said, well, this is probably where it was, and then it broke down. Yeah, I know. Like, you're drawing like an S-curve, that's probably the way I would do it, like that, just to illustrate it a little bit better. But the main thing that you want to look at is where are the resistances. They're here. And then where does it kind of switch? Right here, right around that earnings. It switches from being like resistance down consistently to now it's support. Is it a straight line? It's not perfect. I would say if you go back to the peak here, the best one would probably be that June 6th to 7th peak. And then from that point forward, I wouldn't say you're guessing, but what you'd probably want to do is use the only place, which is there's only one place where it actually switched to support early on, and that was over here on the 19th. There's no other indication of support. And you're starting to see visually like this almost works perfectly, except for here, right? Now there's gaps like slightly below. Again, why is that? I don't know. Maybe because creeks aren't really that firm. Maybe because there were multiple levels here that were being met. Maybe it's more like a range. There's just so many different things, you know. Maybe because it's more flexible. I don't really know. I don't really care that much either. The reason I'm bringing this up is because if we're looking at, again, triangulation, we should keep in mind that long term, this has been kind of wrapping around and hasn't yet quite found that support yet. This is probably the closest it's come. And again, we could say that that legitimately could be it. Like it hit it, it's going to just go now. But that seems to be like the best, like my best answer. You know, like, well, it just hit it, so it's just going to go, right? Let's take the same thing and let's just apply it. I'm coming to a point here, and I really hope you guys are kind of tracking a little bit, because the big picture here is actually quite interesting, because this, while this did jump, it did not, in my opinion, did not check that creek on the way out. So I've got all these like squiggly lines here, right, anticipating what might happen. But remember, this iteration and this iteration both are iterations. So I'm just going to keep that in the back of your head, like 1, 2, okay? 1, 2. It's really important. When this extends above, notice that it builds a resistance lower, right? And this is eventually checked out when it takes off again. So if I'm looking at it as like 1, 2, this does jump above, but it didn't really like do a super strong check. Kind of like barely back tests it and then like takes off. All right. We can say that that's it, but we know that it didn't do a hugely strong back test. Kind of checked it and moved on. Maybe it's done, maybe it's not, whatever. All right. What this would lead me to believe is that if there's a breakdown of the ice, which is the current competing level, and I'm going to make this a different color because it's super obnoxious being the same color. If there's a breakdown of the ice, what this tells me is that this is still like the strongest creek, because again, this is the directional input from on top. It probably even has, yeah, like parallel structure here, right? With even like a middle where that gap is. Directionally, this was suppressed, pushed out, it's trying to find support. So it's looking okay. But if this were to break down through the ice, which hasn't happened, but if it were, where would you expect it to go? You got a really easy path here. One's a clear middle that's been used before, but in this case, it was used as a kind of a shakedown point. And this is where things get really like complex, because I could go into this in high detail and really look at individualistically like what has happened in the past on every single one of these iterations could happen in the future. I could do that. The short answer is totally could be the same, right? Where it's like a 50-50 marker, essentially. It hasn't happened though. Why? Because it broke out again. Well, it already did a 50-50 down and it didn't make a new low. Is that a change of character? It could be. Just like we had to change a character here when it didn't come low. This didn't break down immediately. But I have to ask the question about this idea of iteration. Did it still do the same thing on the way down? And the answer is, yeah, it still did the same thing on the way down. It's almost exactly the same, okay? Because if I take this and I look at this from a parallel standpoint, then I think you could make a pretty strong argument that that's essentially like the exact same iteration. Well, what happened here is it pushed up and went higher than that middle, right, where it dropped down through. We could even just do a retracement check and just see how far that retraced back up. It retraced exactly to like the 618 when it broke back out. What's a 618 retracement here if it does retrace to 618? Oh, it's 358. or or it's 353. Okay, is that way off from everything else that we had talked about? No, it's right there. It looks like the middle of this kind of parallel of resistance coming up. Maybe more like that. Right here, does that ultimately break you out above the top? No. Could it? Yeah. If I saw something like this, even though I'm like not the most bullish right this second, if this range were to form an accumulation right here, it is possible this could just keep going. Sure. But I don't think that you can do this with a whole lot of expectation, because even if this pushed up really high and overextends, we have seen this before where you get to the end and it's still a distributive action. This is like a secondary motion that looks really good to a lot of people. It gets a big buy-in, but oftentimes it's just a bull trap, to be honest. You get this higher drop at the end because it's actually weak. This has specifically happened in like half a dozen places on AMC's chart. So it's a very mixed bag. But either way, I'm saying like that makes sense. Like 350 makes sense. Up to 360 makes sense. Nothing else right now makes a whole lot of sense beyond that if you're calling out upper targets. It just doesn't make sense yet. It's not out. It hasn't broken out yet. And the bigger problem with this overall is still present, which is that you're asking a question about, well, like, does it have to come back down? I drew this one out of, and I'm going to delete these two. I drew this one out of just like curiosity for iteration, like iteration's sake, right? Where is this pointed to? This is pretty low. Normally, if I was looking at this from it's like 180. There you go, Booksy's going to 180. Normally, if I were looking at this from a wave point or a wave perspective, I would suggest that it doesn't really make sense to do anything except for what is normally done with these kind of waves, which is just to kind of measure the up, down motion and using the cross, because that's typically what I would use. I would take this and I would measure from here to the top or here to the top. If it comes up again to this top right here, which seems pretty likely because it seems to be following this guy. So again, going into earnings, probably measure this top or this top. I would go from the peak. I would come through the midpoint. Again, one is right there. Peak. And then one is right there. And I'd be looking at this like this is probably where it's going to go if it drops again. And it is where that creek was pointing. And that's the kicker here, is like, yeah, it's pointed like 170s to 180s in September. Well, why do you think it's not going to do that if it looks so obvious? Remember, we're talking about how this is an iteration, but it's also an iteration within a range. So in 2020, you actually got the same setup. May not think it's the same, but it's the same. It's right there. If not the same, it's extremely similar, okay? For a lot of reasons. In the same way, you might say that, well, does this build out pretty well along certain angles, like 1-to-1? Yeah, I think so. I mean, if you look at this here and you just like copy it over, it's probably about the same. Usually the directional movement of these things is pretty comparable. But the downward trajectory is really the one in question. Now, the first time it goes down, again, approximately, is it approximately correct that this hits on that bottom here? And the answer is yeah. It's approximately correct. Coming off that top is pretty darn close. That waveform breaks down. There's the sine wave, right? You get the reduction. It's like a 50-50. The second time, does it do it? Spoiler alert, it does not. There are moments that it gets really close. again, but it doesn't actually come all the way down to the bottom. Well, you cheated. No, I didn't. I went to top to bottom. What about right there? It didn't hit the top, but it's exactly the same. It's the same line. That's the same middle line. It's the same cross. Why does that matter? Well, it matters because if I thought back then that this was going to follow through on that, again, there's like no real way for me to do this in retrospect without kind of forcing myself to do it, like the way that it would be done, I suppose, would be to use like a trend like this. And what I mean by forcing is kind of like forcing it to kind of go into a spot where it goes lower, like here. But I already telling you, like, that's the way I would do it. I would use like the trend as it's built out, just like I would do it here with the low and the top, right? And I would use that as the trend that's built out. So that waveform should be correct. And then we already know the answer. Did it happen this way? No. Well, why? It went the complete opposite. Let me ask you this. Do you think that bears probably thought this was going to happen going into February? Probably. Why didn't it happen? Because the range on the whole was more powerful than the wave down. The wave down was really more of an effort to get to the bottom. Once you got to the bottom, whatever happens, happens. Could it have been significantly lower? Sure. I think we could make that argument. We don't know. It didn't happen that way, so is this just wrong? No. It's just channeling down into the bottom. And the bottom is there. If it were lower, maybe it would have been lower. Okay? So the reason I'm saying that is because right now, I do think that people who are saying 180 and 170, they're probably not completely wrong that that's what's in view if this were to break down. I mean, there it is. It really almost doesn't matter how you draw this. It's like, no matter how you do it, that pretty much is evidenced, that would go very, very low. But just like in 2020, you have to then take that with a grain of salt and say, look, it may come down and reach this marker, but it doesn't have to go all the way to the bottom. And I'm looking at this right now. Look at this motion right here. This guy in particular, this is where it crosses the center mark. All right, remember, we didn't invent this out of thin air. We didn't invent this like structure by picking these tops. We didn't invent this structure by picking these bottoms. We did none of the sort. We actually looked at this and we said, where was the creek? We did this by looking at this and looking at this. That's it. That's what gave us direction. Everything else falls into place because this is the correct direction. Right? All right, so look at where the top is here. Look at where it crosses the middle, right on that point. Now look at, as the crow flies, where is it possibly landing? Right on earnings. Well, if this earnings is to believe, I don't know which is which. Again, this may not be completely correct, but where is it? $227. I hate you, Booksy. Wait a minute. So you're saying if it dropped in earnings, it'd be 227. That's like that 226.36 number that you had for a billion years. Yeah, it is. That's what I was saying. The 304, I don't remember exactly why I picked that particular number until I looked at the numbers that were available and I just did the math, measuring it down. I was like, well, that's a doubled value. Now you can look at the creeks and say the same thing. So what would be the goal then of raising it up? If you think, Booksy, that they're trying to get there, why come up? Because we need to drop. This seems really unrealistic that you're going to drop that far that fast. It doesn't seem possible. Why bother? Why not just get an LPS or just drop a little bit? This doesn't make sense. This is too far, too fast. Hey, I don't disagree that it's really far, really fast. Okay? I don't even know why this would not make sense to me in some ways because I'm like, well, why in the heck would it drop that quickly? It doesn't make any sense. So I'm kind of left with this thought of like, there's a potential here that these are not actually done because we don't have all four. So again, the only times we've crossed up and over are here and here. We can see there's an acceleration for sure. That's a good sign, by the way. That's the same thing that happened in 2020. It's a good sign. We can see there's an acceleration. Both have a really nice, very similar ramp in volume. One cross up, one break, one cross up, one break. Very, very similar. Again, I was doing this back when we were looking at 4 because I was like, it's probably going to be pretty similar to this breakout. You're going to have these rising motions. Well, this looks a lot stronger than that did. Yes, it does. Doesn't look like it's going to just keep going down the same amount. No, it doesn't. From a helicopter standpoint, yeah, I mean, you could sit here and argue like, well, I think it's going to move the exact same amount, and it's going to be way down here, you know, at $1.80. Again, that's fine in a vacuum, but we'd have to contend with the floor. Just like in 2020, in a vacuum, it should have gone lower as a channel, but there's a floor there. This avoids the floor, pumps it up. Very typical cat ears. The one thing that always strikes me about the cat ear is the middle of the two ears. Without fail, when I just doodle it, the middle of the two ears never comes significantly below, or very, very rarely comes significantly below. So like this is almost always, when it's bullish especially, this is always like range bound. And what's very curious to me is the way I used to draw it was I would do these arcs. And it's on the master fractal too, but I would do these arcs, and you probably remember this if you've been around for a while. I would do these arcs because the middle of the cat ear would always be like elevated. And I found that to be very curious. Like, why is it elevated? I've since come to believe that the reason it's elevated is because it's distributive. Because when you're in a distribution and you elevate it, aside from maybe a sign of weakness, you really end up spending a lot more time, in some cases, again, selling off the top, loading up. Now, you might say, well, yeah, but you've said in the past that if it's elevated, it's bullish. I know. You guys are like, I hate you, Booksy. It really depends on how low this goes. I actually think if this goes down first and it's healthy, it tends to be stronger. It just does. If it stays elevated higher, then I'm always concerned because there's a lack of like effort to come down. I'm always concerned that it's going to do a fake out up thrust and then drop like a rock. Because that's more typically what happens, is that we get like a UT or a UTAD when that happens. Right? We break the other way. And you can see there's like a rising wedge here or whatever you want to draw. Okay. Another phenomenon, another reason why this may occur is because of the nature of iteration. Because this is iterating. Yeah, if it kept doing it, then the expectation would be that, well, wouldn't it just keep doing it like over the same values potentially? You know, and the answer is, well, yeah, I think that's probably right. Just like we have here, it drops below and then it breaks out and it has this nice rebound. This breakout right here, and I'll make it again a different color. This is getting kind of confusing. Going like Easter colors here now. This breakout right here is the same, in my opinion, as this breakout right here in terms of what's happening. Because if you look at the waveform down, right, and the waveform down, it's the same motion in terms of, again, what's happening. Well, I don't really know of a great way to illustrate this other than to maybe do something like this. And this just kind of clutters the chart beyond all else. And I don't know what else to do. But visually, like I'm trying to explain it without being able to like, I don't know. We're explaining it in a video format. So it's the best I can do. It's just to give you another kind of piece of that puzzle. And I would look at it as like, that's the drop ledge. This is like the retest that doesn't come high enough. And this is kind of the same thing. There's this drop ledge and there's two retests right here that just don't come high enough. So honestly, I would look at it as pretty much the same as this. Weirdly enough, even though it goes way faster. If you really want, we can kind of do like a halfway in between kind of thing like that. And suggest to you that's the same motion. And that's why partially why I was expecting it to come up to like 330, because it's going to make that motion up. In theory, this happens again and again until it's ready to make a decision. So we don't know yet if it's going to change direction, but you're going to look for signs of difference. This at first looks comforting because it looks to me like, oh, it's a change of character, right? Yeah, and I have to contend like it's a possibility. But I'm telling you that middle of the cat ears is dangerous. Like this is ear 1, but it's ear 1 as part of ear 2. Like this is ear 1, but it's ear 1 as part of ear 2. This is ear 1, but it's ear 1 as part of ear 2. Like they build into themselves. So you might be saying like, again, like it's kind of confusing, I know. But if you remember that diagram, this motion right here, it's the same motion. It'd be the exact same thing over and over again. And it's going to keep doing that. So like every time you're seeing what you think is like the end, it's really ear 1 of ear 2. That's too confusing. Why don't you just keep it simple? To me, that's simple. I don't know. To me, it's like pattern. It's just pattern analysis, behavior analysis. So it's like, that's why when I drew this, I was like, well, it could go up here. That's pretty far. But it doesn't change the character because this guy came up to test the bottom on this drop ledge. And us coming up to test the bottom on that drop ledge, it's kind of already happened. And if it came up higher, like that's fine, but it still hasn't made a new high. So if it only came up to like 354, you might say, well, that's a change of character. It went through the bottom. That's not the same, right? I mean, here, when it jumped over, you know, it did come back up and just hit that top. So why not say that that's a change of character if you're seeing that jump and it's going over that? I'm looking specifically at where this drop ledge is, right there. Why not say that's the same thing as one of these ledges? It is, but I have to stress, like, it seems more likely to be this guy. Even if this comes over the top, unless it proves to change character by altering direction, it's still lower. And we just did it a minute ago. It's still a 618 retracement. It's the exact same retracement. There's not really a change there. It's the same motion. It's a backup. So from this standpoint, it's like, yeah, this is doing essentially the identical pattern. It's like pumping up, retracing 618, pumping up, retracing 618. The difference now is it looks like it's compressing. And it is compressing. It didn't jump this. That's obvious. So there is a bit of strength here. My biggest concern is that this is like a final consolidation effort, and it makes the most sense to me. So when I get to that point, I'm left with like the question of earnings. Like crap, you know, what happens at earnings? I don't know for sure because I can't really tell based on where earnings is, whether it should be up or down. That's not a good place to be because you could probably argue that it should be up on earnings, not down on earnings. All it takes is just squishing this together a little bit. Well, that's not helpful, Booksy. No, it isn't. Another thing you could do is you could use the peak here in a similar way that we just did and suggest that this is kind of the direction it needs to go. Again, looking at where that is compared to the bottom, this is 226. This is not even close. But if it got to 226, it could happen later. It's just question marks. Again, you're probably wondering like, well, isn't that getting faster? Yes, it is. This is also important because while downside is also accelerating while upside is accelerating. And that means you're coming to the end of the in my opinion, that's a very good sign you're coming to the end of the range. If you're accurately doing this and you're getting that acceleration, you're coming to the end. Like there's going to be a big directional shift. All right, that's my very quick, too long didn't read version of it, is that if it's doing that compression and you're getting that squeezing motion, it's coming to an end. The same thing happened back here, and it did compress, and it came to an end, and it was not fun, obviously, at the end, but it did. Okay? Not unlike this, although I don't think it's as severe, not unlike this, there was a danger in this kind of staying elevated, right? Again, that cat ear compression into that end is dangerous. It is. It creates a sense of misfortune, again, but remembering that while it's possible this could just drop off the face of the earth and go to nothing, there's that floor, just like 2020. And guess what? It's bad news, Bears. Bad news for the Bears, because in this case, we do have really good cause, I think, for an effect, which is the nature of the on-balance volume, which is that it's setting up very, very high like it's going to drop, but it looks just like 2020. It needs to get that dip, but I think once that dip happens, that's really the spring, like the whole point of this. So my question is, like, this could efficiently be what we call an LPS, but I think it works much better as a potential spring, and it's going to feel really bad. It almost doesn't make any difference how quickly this may or may not iterate at this particular moment. The only way this breaks out into a bullish price action right this second is if this were to jump up and above and hold here and then do it again. And we've kind of gone through this a couple different times. The biggest concern that I have about this setup, and to me, it goes without saying, the biggest concern I have about this setup is that on the macro, I don't want it to go up before it's ready to go up, because that signifies a very high probability that this is actually going to be bearish. And I don't want to give you a sense of like, oh, this is a good thing, when I don't really think it is. If this iterates to the upside this quickly, this fast, you're going to make a lot of money, but ultimately it avoided going low, and then all of these creeks down below are now like fair game. You basically have the potential, because it didn't make that final drop and that bounce, because it's like a U shape. Yeah, the S curve is nice. We were talking about that a minute ago right here, right? It dropped low, but it's not in the right spot for a build out, for accumulation. This to me is high danger, and you're very likely going to walk all the way back down at some point to the future, in the future to the floor. As opposed to the more moderate breakout, which when it goes low here, although it may not go as high immediately, it hits the creek and it stays in its lane and it breaks out again. I don't know exactly when that happens. This chart's, I'm just doodling it right now. And then you have a really good chance this is going to go up to like 20 something, by the end of the year, because it crosses the creek instead of jumping over it immediately. It crosses it from a reaccumulation, which is really what we want. You don't want to just like leap it and go up after making this kind of U-shaped bottom. Not a fan. So I'm going to stick to my guns about that and suggest that that's actually what happens. I'm hoping that's what happens anyways. I can't control the market, but which means that this should just kind of compress into earnings. It's very possible that this one doesn't go quite as high, just like this one didn't go as high. You could probably do some kind of measure to like divide it in half again or close to it. Let me see where this came from. It's pretty close to that top, so I think that would be fair to say that it'll be pretty close to this top in terms of like a walk down, something like that. Makes sense. And then in the end, if we're right, and we don't know for sure, but if we're right about it, then we have some kind of a compression here, and then you have a decision made. It's not impossible that a cat ear can break up one more time and drop, Most often it's the previous one. Doesn't need to go that high. It may at most come up to here because it's really just a fake out above the creek. So it might hit like 350 and then drop. That's usually more common anyways, as opposed to going up above to like 424. Unless you found a good reason to do that, I don't think it would be as likely to do that. This is all that's necessary though, right here at the end. So usually like one final fake out, and then there's got to be some kind of a weakness in here, but we haven't quite gotten there yet, so I'm not going to talk about that just yet. But that would be like the way it would distribute essentially and then come back down. And that's actually a good thing because we want to see it come back and just hit the floor. If it does that, man, I'm like super bullish. And this goes into potentially like FOMC right over here, which is around September 16th. Totally possible. Why would rate cuts matter for AMC? If you have to ask that question, we're not on the same page. Honestly, I don't know for sure this is what it's going to look like, but I can tell you that I'm watching this very carefully to see where those iterative waves go. Right now, to me, it looks like it's just kind of condensing, but that would be a great place before the drop. Kind of lift it up, keep it high, and then drop back down. I also measured just to do it because you can already see there's a potential head and shoulder motion here. I looked at where it was before earnings, and I took a measure from here to earnings, which I'm going to move up now. I took that same measure and I put it on earnings as it is now. And you can see it's pretty much in the same low. So again, speaking of iterations, this would suggest to me that you could have a bounce and kind of build out into that wave. Maybe this isn't so cut and dry. And then the previous one looks very close to the Monday the 4th, which would make sense if it comes after a Thursday, Friday earnings report. So shoulders, do they kind of match? Yeah, they kind of match. That doesn't mean a whole lot to me right this second because we haven't seen a shoulder form, but if it were to form, would that make sense? Sure. If it did that, it would probably be a lot more severe, like a lot more quick. I have it really, really slow here. But I would imagine that you'd have a pretty succinct and fast compression, and then there'd be a very swift answer at the end if that were the case. What about head and shoulder targets? Does that even work? Well, the neckline, again, neckline hasn't broken. There's no reason to oversell this. This is way off in the future. And frankly, head and shoulder can't be confirmed until it breaks. But that's assuming that it broke, let's say, on or around earnings. This would drop you to 237, which is indeed like slightly below the bottom. So again, is it reasonable to say that this could drop? Yes. Does it have to drop? Another question. So I could do this like 7 or 8 different ways, and I've been doing it every time I get on here. I've been trying to do it different ways. The hardest part about this is going to be timing. I think that the rest of this makes pretty good sense to me in terms of like where it may drop, the lows that it may hit. I'm looking at 237 down to maybe 215, but I think that 236 is probable. It does not have to be there, but I'm just saying, to me, it looks probable. I'd be much more convinced of this if over the next week or so we really chop. We may hit, again, 350, but if we really chopped right here around specifically that 304 level, that to me would probably convince me more that that's probable, that it's going to happen. And if there's any kind of a weakness, sign of weakness, again, same deal. It's going to look like a wedge. Where does that leave you with GME? You know, circled back here. You talked about AMC again forever. Now the market's closed. So where does that leave you with this? Well, So first, I'm not gonna. There's no reason for me to like boast in anything, right? But I will say that there's been a really strong consistency on GME that's made it very easy to kind of predict where these levels need to be. This one's been really simple, okay? And I don't find that's something you should take for granted. Like it's great when it's simple. To me, this was very likely going to come down to this 2250 and then bounce out, and then we'll see. But I had done a couple measures here that I found to be extremely convincing for myself, because this marks itself as a pivot point on the 15th of July, where it would either be at a high or nearing a high, or at a low and nearing a low in terms of like a center mark pivot. If it's a low, then this is like a bottom of an S curve. If it's a high, it's still a bottom of an S curve, but it's a rising S curve. And that changes things. So I had marked off two paths. It looks right now like a little bit of both, unfortunately. That's always the way it is, isn't it? Kind of sandwiched between the two. But if I had to pick one, it actually looks more bullish than not. It does look like it's getting ready to break out again and maybe potentially head up all the way towards the top here. And I do think that you're possibly going to be hitting like 25. I don't think after that point I would call anything as done, but we talked about an SOS here around 25. And then again, depending on what happens, you could have an SOS that finishes. The measurements here don't go to the moon. They only go to 2650, and that's around July 24th. Well, where does that leave AMC? Again, AMC being that in that such situation that it's in, you might think again that that's pretty darn good for AMC. Well, if it's running up here, why wouldn't AMC be running up? Different folks, different strokes, right? GME can have a run up here while AMC is just kind of chopping. The wavelengths themselves may be very similar. Like you may have upside again to like that $3.47 mark or $3.60 mark, whatever ends up being, going into the 15th. And then as this chops down, AMC has a deeper correction. We don't know what we don't know. What I can tell you is that the waveform analysis here is pretty straightforward. And right now, I think there's very little doubt in my mind that, at least at the time being, that this has jumped over and is trying to hold. It's a little bit of a mess, I know, but there's a creek here that's holding up very, very well, and it did jump over it. This particular motion, I don't really love it right now, the way it's moving right now with the volume. There's very little volume, but it hasn't broken down, I can tell you that, and there's no real cause for alarm just yet. It'd have to come all the way back below like 2310 to really have any serious concern, you know? If at that point it comes down to 2310, then we're really in more or less in this second scenario. We could shift some of this stuff around just a little bit, and it's like, oh, there it is. So what? We're not holding up. Pretty straightforward. It really isn't that complex. So this was based on micro measurements of like up, down, ups, and then also measuring from here, the up, down, ups, and each section having pretty much the exact same measurement made it pretty easy to see where those would be. So this would be the top measurement. You'd have a bottom measure about the same, and then another top measurement. The rest of it, a little more speculative, but 2211 is the gap, and that is something to think about, because there's a very clear wave directive that direction right now. So if downward this builds out, then what we could take from this, and I know I've got a lot of marks on here. What we could take from this is that it's kind of avoiding, maybe the best way to put it is like it's avoiding a bottom, but we're really just kind of working this area right here. If you look at liquidity, thinking about it as we're really checking out 2350 down to 2210. And so if I were doing that, could I build out a auto reaction, a phase B top, and then come down and still have a spring? Answer, yes, you could. Like that, there's nothing wrong with that. So if the auto reaction, which was higher, it didn't make a lower low, that's good. There's a strength there. But if the auto reaction was coming off the bottom, which is at low of like 2253, and I believe it was a double bottom. 2253. Because that 2253 held, that's potentially an auto reaction and a phase B top. I think beyond that, we could say this whole thing's an auto reaction, still could make a phase B top, another one. Again, that's more of like the double pump right here with a potential backup. But I wouldn't be scared. That's what I'm saying. I wouldn't be put aside by the idea of coming back down to check this, because at the end of the day, it's already across. So if it holds it and can continue to make certain advancements, I think you're in really good shape. As long as it holds it, that's what I'm trying to say. So auto reaction, phase B top. Yeah, you can come back down through the floor in a spring, which is sort of the way I had drawn this out. So the other point that I would like to make about this before kind of wrapping up those thoughts is that, yeah, they look different in some ways, but they're also kind of the exact same. If you look at the wave formation here, it's no different. One's just building upward, one's building downward. And ultimately, this is probably stronger, building downward. At some point, down needs to happen, and it's better sooner than later. If this happens right now, I'd be very, 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 very bullish about this. Like extremely bullish about this going into August, September. If, on the other hand, it ends up doing the S-curve, again, temporarily going into July, it might look good, but I don't actually think that's necessarily a positive. I think you still need to make that pullback. And in addition to that, the idea of like too much too quickly, we've kind of already done this once. We did this big S-curve up, and then it dropped like all the way back down. I don't really want that to happen again, you know? And that's kind of what we'd be potentially lining up here. It's another major drop back down to 22. So I think if it comes back down, this is really strong as a bottom. If it springs just beneath, what's the number there? 2245 down to 2210. I think it's very, very strong. So good chance that's going to explode if that happens. And probably end up way back up here near like 28 to 30 pretty fast. Again, unfortunately, if you have a again, and maybe both are hit. It goes down first and then just rips to the upside. Unfortunately, if you have something move too quickly out of the range and it doesn't check the right levels, it's just not usually a good sign. So I would be extremely happy if I saw this kind of come back down into the end of July. I think you have a stronger chance. It's a good breakout. Yeah, but what about AMC, man? It's going the opposite way. Is that what you're saying? Like, we don't know what we don't know yet. This is still theory. I'm always trying to do my best, always, to figure out kind of what the best course of action would be. The more simple, the better, but what makes the most sense is what I mean. Like, this is the simplest explanation because it makes the most sense to me. I am very nervous that at the same time, I'm always nervous. You have to be cautious, I guess. Maybe nervous is not the right word. I'm always cautious about the idea of like the what ifs, you know. What if it doesn't, what if it doesn't do this and it breaks out here and I'm getting puts and I'm like in trouble because it drops and, I can't really tell you what to expect. I can tell you that it came down, it kind of tested that low liquidity again, scooped some up. We're getting little bounces here and there. We haven't seen it test the lows. I think that needs to happen. So I'm going to vote for down. But could GME, again, accomplish the same things in a similar way without having like a full-on breakdown? I mean, yeah, it's here. There's obviously the chance that this kind of breaks down low, down to 17s or whatever later. But I wouldn't be surprised if it pumped up really far and still came back down. We talked about that before, this idea of like going up into early August and then having like the potential that this comes back down again. This is like the middle of ears here. And it does hit 17, but it does it going into September, much the same. It's totally possible, plausible, reasonable. Like, this doesn't look any different to me than AMC. It's just that the amount of directional movement is slightly different. And it doesn't ultimately go to like really new lows. It just goes down and gets to that spring level. And then it takes off all the same. Why September? Why did it change? And why are you going from like one to the other? Remember the entry here? And when we came down, there were a couple things I've said in the past, and they're all pretty much the same. August has been on the radar because August 22nd is just a really important date. It was when APE was created. It was when the split happened. I mean, you can't make that crap up. It's just there. It's literally like a year apart or whatever. It's just there. 2 years apart, rather. Whatever. Maybe it's a year. Maybe it's 2 years. I think it's 2 years. Maybe that was a year. Get the dates right, Booksy. No, August 2022. Yeah, it's a year. Sorry, everything's blending together. August 2023. So August 22nd's been very important for a while. But we have kind of gone back and forth between that and the September dates, because the September dates for a long time have been on my radar because that's really when it entered the lower range. If you look at the drop, like sure there's a drop there, that's where it happened, but that first backup happens right here. It's sort of the confirmation of lower, and it's the ledge. You know, it's the second ledge. There's 3, but I would consider this one and this one the same because this is backs up to the same area. So basically a hook that happened twice. And ultimately I'd be looking at that saying, well, that's where it dropped in. Like it hooked and then dropped. It's right here. So when I've been looking at it is like September 6th seems really likely. And then another one that pops up quite a bit is September 11th, because that's really, and maybe even the 13th here, that's really where it broke that downtrend. So if you look at the correctional value and the place that it dropped in, those are the 2 dates that you get. So you would have September right here, you'd have September, I guess it'd be 3. You have the low, which was like September 11th, you'd have September 5th, and then you'd also have this guy over here on the 14th. Now, knowing what we know about rate cuts, it seems to me that the market, surely some of the market's going to rally into that. But I wonder about the weaker stocks, if they rally into it, or do they, stay low until then? History would say that we probably stay low because more often than not, while everything else is rallying, we've been going down, or at least to the extent of like the major market rallies. When you look back at this one, the market's rallying here and we're going down into a spring in the meantime. I think that's a curiosity of mine to some degree, because I wonder if the September rate cuts are to some degree kind of predicted on other charts, like they're already priced in. Like I wonder if we do see an earlier break in August for the S&P 500, for example, some of those bigger tickers, if they're already going up. I mean, kind of makes sense to me. They may be already in like a bit of an uptrend going into what we think is going to be the termination point, which might be around February. So if that's the case, well, I guess what I would say here is that this is already kind of proving true, because when we look back at December and what happened here, like, yeah, there's been all kinds of crap that happened. Don't get me wrong. Lots of crap that happened. But especially since April, the market's rallied. It's already back to all-time highs. AMC is still in the downward motion here. If you look at the COVID drop and the subsequent rallies, COVID for the market was just this quick dip, and then it starts rallying back up and ends up going up until while the market's bullish until about here. And it's the same for AMC. Although AMC has this kind of nasty whip around. But notice, like before that point, AMC was already like on the downward trajectory. It wasn't like it changed direction because of. That's a little bit different than what we saw in the S&P and some others, because even though the S&P had like a weakness in years prior, like sign of weakness, it was still going up. So the directional input here kind of just doubles down, and then you get this bottoming motion. And there's similarity here where you have an already downward motion right here. And so that April doesn't even really matter that much. There's a huge correction. The S&P 500 has this massive drop and a correction. And again, go back and look at 2000. I'm not saying COVID is the same, but I'm just saying like the setup is actually quite similar. There's a widening, there's a weakness early on, a bit of a widening, and then it drops all the same here. So there's this like widening out, and then it has this nasty correction. It's already like advancing, by September, it's already back to like all-time highs. That was that year. And then it just keeps going. I think the similar comparison perhaps now would be, we may have a sideways period. And that sideways period is maybe where AMC finally goes for its lows or whatever. But I would be curious if it just keeps going until February. Like, that's why I've had this on the chart. It seems right to me that this could end up just kind of chopping upward until then. Even if it has a little bit of a correction here, it still makes new all-time highs. Maybe it hits 700. I don't know how high it needs to go, but that would make sense. Because from AMC's standpoint, it's doing what it was already doing. That really didn't change much of anything. And then you have this kind of bottoming out and then a double whammy up and up to kind of play catch up. Hits maybe a little early. It might even be the reason why we're seeing some December targets. And this is a curiosity too, is there's also a December Fed meeting. I'm wondering a lot about why that came up, because I found on GME December 8th targets or something like that. And I thought, that's weird. That's not really a time where I would expect a high. It's like the Santa rally is over already and it hasn't even started, right? Most of the market, you're thinking like after Thanksgiving, But I'm looking at to the new year, and I'm looking at it like, well, I don't know why exactly, but I found that there's a lot of these early December dates. So I do wonder, I'm not sure yet what to make of that. I don't even know why I said it, because I'm like, that may not be a good point to make right now. But there are a lot of these dates going out into maybe about December, which make me curious. So I'm just thinking out loud. I do wonder if we have a breakout here. Again, doesn't probably come as high as people want it to go, and then people are not very happy with that, more than likely. And then you have the consolidation and the creek jump. And I'm curious if this hits in December instead of January. Again, weird timing, I know. But then again, so is a September run. That's a super strange time to be running. But I do wonder if we hit like December instead. And then by the time that March comes around, we're actually already like dead. It almost makes more sense to me, given like the compression of the timing here, that might be the case. And that by the time we actually hit the market top, I think it could end up being very similar in some ways to 2000. And I'm not going to go way too deep into this right now. I don't want to get these numbers way off. But it kind of makes sense to me. And then based on like the bigger wave patterns, that does make a lot of sense. Because it puts you in the right place, essentially. And it is the triangulation right here. So I do wonder about that quite a bit. But I haven't made a decision yet. I don't know. There's not really a decision to be made. I'm just trying to decide if I believe that that's possible. I think I do, but I'm not sure yet. this makes a lot of sense to me because of the macro creeks and stuff. This really, really works quite well. Really does. Right there, that one. This makes the most sense to me of all the things. It's going to go. The timing on that is just very strange. It may be more like end of November, like third week in November or something like that, into December. Yeah, that would totally work. This kills me, dude, because I know some people are going to look at this and be like super irritated, but I'm telling you, man, this is a pretty solid setup. It really is. There's a lot of like little questions, but at the end of the day, I think it's really good. It's like perfectly like 418. It's the same thing as everything else. There's going to be people who will just look at this and just say that's hopium. It's ridiculous. But I just don't. That's not the way I see it. I see it as a yeah. I just see it differently. I don't know. That didn't really explain anything, but like, that didn't help, Booksy. Yeah, this should be the final build. That's what I'm talking about, dude. It's like right there. It really is. This should be like the final bit down. It's so close. It really looks like it's going to be right at earnings to me. Maybe it will be some kind of dramatic dump and pump type deal. I'd sort of imagined it would already be down here, but now I just kind of wonder if they're going to use... I don't know. It's so close. Real quick. So I know this isn't everybody's favorite cup of tea, but I gotta tell you what I found on Apple. So Apple has a very, 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 very consistent waveform that I really don't want to ignore. There's always a possibility that the positions of my waves are wrong, but I did some waveform analysis on Apple and I looked at directional input. For upward momentum here, upward momentum versus downward momentum, downward momentum. And then I looked locally, and I thought this was almost like a joke at first because I was like, it can't be that perfect, but it is quite perfect. It is basically perfect. So Apple's had ups and downs in a consistent wave pattern. If you use the first measures from April 21st to May 23rd, it's about a month apart. Basically, again, April 20th, May 20th, you'll see those two bottoms. Just do that and then divide it into quarters. And then just keep doing that. Use that same measurement. It has been absolutely consistent. So I looked at it as like a larger wave, smaller wave, and I looked at the compressions and I was like, yeah, they're pretty much exactly where they need to be. In terms of like where the expectations would be that highs versus lows. So right now, what this suggests, not necessarily that this is going to get there, but I was looking at the breakout and I thought it doesn't, I know this came high, like it almost came too high. And then that makes you think it's going to just distribute and come all the way back down. But if Apple holds above 205, and specifically like 205, I think it was like 205.60 up to 206. If it holds through that going into the 18th, I think there's a very strong chance it's going to go to 220. Like a really strong chance. It's going to be like 220 to 221. Because what that would tell me is especially if it kind of like slightly breaks down out of this like rising trend, but then recovers it and jumps the creek. That's going to be like a pivotal moment. I can't guarantee success anywhere in the market. That's not something I'm able to do, nor should I do it. I think that's really irresponsible. But like right there, and it could happen before then, but I'm just saying, like, if it takes that long and it holds here and it comes back above the creek down and that rising thing while making an SOW, then I'm pretty sure that I got this right. And my expectation would be that these waveforms, they're just so rigid, guys. I wouldn't normally do this, but I decided to break it down this way, and it ended up being like perfect to where I'm like, this is almost too mechanical because this is an upward wave. And so I'm expecting like a second top. It could pull back, like this one has this huge middle, right? But even this, if you draw a straight line between bottom to bottom, it doesn't actually come down to that line. So if you drew a line from, again, April 21st to May 23rd or 27th, whatever it is, this doesn't hit that marker. That tells me that, again, it's all up wave. It's like that idea of like the M coming up and staying higher. Well, I mean, yeah, that's exactly what I'm saying. Sorry, I don't know why I say it's like that. It is the idea of the M being higher. So even though in this particular wave it comes like all the way back down, it doesn't actually hit that trend. So it is possible that this has some kind of massive retracement going into the 18th. But I think that after the 18th, if it holds up and it doesn't go too low here, it should be breaking up towards the top again. Worst case scenario, I guess, is that it dumps too low, in which case it's kind of bearish, right? But if it dumps too low and then it doesn't come back up above this creek, so it only comes back up to 210. So it goes down to like 200 and then it drops to like 210, in which case it's a little more like this weakness. Either way, this should be an up wave. So that tells me that if it holds strong, it's going to go to 220. Really good setup. If it doesn't hold strong, it's probably not a great trade. But at the very least, even if it did back up to 201, it does give me some confidence that this might be almost done because of the compression. It could be a backup. So I'm trying to say. So anyways, the best trade here would be if it holds roughly around 205. It's a pretty good trade. You don't necessarily have to trade it, but that's like a 7% move, and it's probably going to be pretty fast because most of these up moves are extremely violent with like a little bit longer walk down. So it should be a really good move. And then I did the same thing on Tesla, and I'm not liking Tesla's chart very much. I did not find any real strong, consistent measures with Tesla. Except for like on this bigger wave structure, there was I know it's hard to tell, but there's like it's like an up-down wave consolidation that's happening. And if you look here, you might be able to see it quite easily. It's anchored around that midpoint that occurred back in November of 2024. It's already hit the bottom. I'm going to go to 4 hour. It's already hit the bottom on that wave, and I did the bigger macro wave, and it's actually fairly tight. What this suggests, though, is positive because it suggests that there's probably going to be some downside until August, and between now and then there's an earnings report. There's probably going to be some downside before August because this has had consistently like low to high pivots. So the ups and downs, up, down, up, down, up, down. Again, just tracing it with my mouse, and you can see the waveform pattern there is really consistent. It's just directionally, you just have to know where it's moving. So right now, I'm looking at it like, it seems like a down pattern. If Tesla holds above 260 to maybe 250, which I think it was Vader in our chat was saying that's the number I got too. I think if it hits that number, it's actually ready for another big wave. And this is saying a lot because I'm assuming that it breaks out. But if it breaks out here, there's a very good chance that this is going to head up towards, I know it sounds ridiculous, but there's a really good chance it's going to head up towards 600 and 618, 620. It seems a little crazy, I know. But I was looking at this waveform and I'm like, man, I don't know. If a SOW happens, it could change things. If it drops beneath like 255 or something like that, that could change some stuff because that could mean this is like really weak and then comes back down. So it would be much lower if it dropped down there. Then there's a possibility this really just goes back to the top and then distributes like that. Totally possible. But if it holds up and it's pretty strong and there's no sign of weakness here and it breaks out, then I do think it's very possible based on certain fib extensions and other things that this could actually hit that target. Either way, it's a good trade if you're willing to trade it and hold it for a little while going into next year. Again, like where the peak at? It's in the middle of, I didn't make it up. It's like right around March of 2026. That's just based on previous trading. So that's very similar to that February date. This one is not something I would stick my nose up at as much as some others maybe. Apple's kind of a short-term quick move right now. This is a 150% upside move. And again, at first I'm like, nah, that ain't going to happen. It ain't going that far. Like, no way. But then I'm looking back like, this isn't exactly unheard of for Tesla. I mean, last time, look at this move. This was 1,000%. It's insane how much this thing moves. Even these smaller waves are like 170% each. This one's 170. This one's 244. So the idea of going like another 170 is not a big deal. And all that really is doing is going back up and checking the top of this trend channel as well, which, again, it's debatable. May not need to go that far. At the very least, I would say 450 by February. So that's still a really good number. So if you're being like really conservative, that could be a really great trade. If you're a patient person, you're willing to like either buy some shares or get some call options. They're expensive as all get out. Just a forewarning, because I checked them out. They're really expensive. But if you can afford it, that could be a very, very, very lucrative trade. Like, you're talking about dropping like $1,000 or something ridiculous for like one contract, and in some cases, they're not all that dramatic, but I mean, that's a pretty huge upside. So get a big return on it. From what I heard, GME went from moving pretty high in July to August and now much later. I'm just answering that question. If you're still there, Hazel. I went over it. I don't think that I don't think that that's really changed for me very much. I really don't remember thinking that June, July would be a huge deal. I did agree at one point with that when we were way before the summer. So I take that back. I don't want to minimize saying that I didn't do that, because I do remember at one point agreeing with, like, I remember somebody said Roaring Kitty said that. I said, well, that's pretty close. But as things have developed, I've really been pushing towards August, and specifically that squishy time between August 22nd and like September 11th. It may just be dependent on FOMC stuff now, if that's when we're going to get rate cuts. I don't think I would be pleasantly surprised if something happened before then, but I don't think I would expect it before then. Which is partially why I'm looking at earnings as like, this could be a catalyst for downside, potentially. It's entirely possible that there's a catalyst for downside there. So even if it's bullish, that this could be a catalyst for down. I would have preferred to already be down there by then, but I'm starting to think that based on the way this is moving and the timing, unless something really dramatic happens, there's like really bad news all of a sudden, it's hard for me to see why we would just suddenly drop. So that tells me most of what I need to know, because what that really signals from my brain is that this is a good time to trap some bulls. So it's a good news kind of a thing, and then it dumps on really good news. Or it's good news, but they're going to vote on this thing and it passes. They vote on the thing ahead of earnings, and it ends up passing. And then they announce it on earnings that, yeah, they're going to do this offering that shareholders approved or something like that. And then it causes it to like dump down. Yeah, it's strange how these dates are working out though. This is like 226 is like right here on August 26th. If it does something like that, that would be wild. Like that'd be so wild, y'all. Because that would be such a succinct motion. And there's also that macro wave, and I don't have it on this chart. But that one is also one that I wonder if that's where that is. I didn't check it. I don't know where it is. It's somewhere in the middle here. It's like a center mark. You always come back to the center when you move. Yeah, of course it's like right there. Why not? I can't make this stuff up, guys. This is crazy. You're like, yeah, you did. You made it up. You just watch you draw it. Dude, I'm telling you, that's where that line is. I know because I've drawn it a few times. There's a few different ways to draw it, but it's always like in that same pocket. That's crazy. It's so close. Yeah, it's like right there. It meets some of these marks like really well, and then others it's like slightly off, but it basically cuts right through where the reverse split happened. I think there's like a tiny little wick the day right before the reverse split. I think that's the wick that's hit. I think that's what we're going for. I genuinely think we jumped over the middle here, which is great. And then we're going to hit that and then head up to the top. Like that's exactly what I think we're doing. So we're not going to go all the way down, but I think we're going to hit that marker and then head right up to. So it's crazy how like, to me anyways, when I see stuff like this, I'm like, oh, well, that makes sense because then when you look at the big picture, it's like, oh, yeah, it's just a big channel. And these are just waves, individual waves that are going across the channel. And so these little guys by themselves seem like hopium, but then you just look at the big picture. It's like, no, that's pretty much where it should be. Like it just avoided going there. It was in a trajectory path to get there. Now, if it follows through with that trajectory, it's going to be above it. And everything else is like falling into place really well. So I'm excited. This is a little nerve-wracking, but I think it needs to happen regardless. So, but yeah, it totally makes sense to me. That's like 180. Yeah, that kind of falls more in line with the 180 crowd. That's like way late. That's the opposite direction. See, but I think it's the same thing as that. It looks exactly like it. It's the same thing as that that one in 2020 where it looked like it should have been February. It should have been low in February, like way down here. Instead, in February, it's up high. It's almost like they're trapping, maybe they're trapping shorts into seeing that as like the probable outcome. And we're seeing that as well, like that 180. So we're thinking that it's going to go there. But the timing is like perfect. It's the same thing. See that? Like right there, that October timing. That's just very odd to me. That's really, really similar to what we see on that wave structure here. Of course, I don't know where the macro big picture one is on this. I guess I could find out. Isn't that the same? It's like identical. So it does come down there, but that's where it does the retracement. It's like a pivot point. That's suspiciously accurate looking. Well, I hope it happens. All right. I hope you guys have a great day. I will catch you tomorrow. I gotta go.